Have you ever wondered what the stock market is and how it actually works? Let's break it down in simple terms and compare it to how our ancestors traded goods. Let's begin. The stock market is like a giant online marketplace where people buy and sell shares, which are small pieces of ownership in companies. These shares are traded on platforms called stock exchanges, like the NSE, BSE, or NASDAQ. Think of it as a supermarket, but instead of groceries, you're buying and selling ownership in companies. Now let's go back in time. Ancient trading was all about bartering, exchanging goods for goods. If someone had wheat and needed fish, they'd trade directly with a fisherman. While it was personal and simple, it wasn't efficient. What if the fisherman didn't want wheat? Trading would stop right there. Fast forward to today, money and stock exchanges replaced direct bartering. Now, companies list their shares on the exchange, and anyone, from anywhere, can buy or sell those shares online. The stock market works on supply and demand. If more people want to buy a stock, its price goes up. If more people sell, the price goes down. So why does this matter? The stock market allows companies to raise money to grow their businesses, while investors can earn profits through rising stock prices or dividends. It's like a win-win for businesses and investors, a far cry from the barter system of the past. In short, the stock market is a modern evolution of trading, connecting millions of people worldwide. And while the methods have changed, the goal remains the same: exchange value efficiently. If you like the video, please hit with like, share and subscribe. Thanks for watching.